So today I'll be talking to you about real estate investment trusts. First off, what are they? At their core, real estate investment trusts are companies that own or finance income-producing real estate across a variety of property sectors. Think of them as the middle ground between real estate and stock market investing. Now, these aren't a new concept. They've been around since the 1960s, and not just real estate tycoons able to benefit from them. Everyday people such as you and I can also benefit and partake in real estate investment trusts. In terms of the real estate that's part of a real estate investment trust, that can be anything from a shopping centre to office space to apartments to hotels to residential properties. Real estate investment trusts include all of those, and they give investors a taste of the full real estate spectrum. So now let's talk about the different categories of real estate investment trusts. There are more than 3 categories, but I'm going to put them in these 3 groups just to make them a bit more clear. So you have equity real estate investment trusts. Now these deal directly with properties and deriving income from rents. And then you have mortgage real estate investment trusts, which focus on financing real estate. And thirdly, you have hybrid real estate investment trusts, which are a blend of both. Now, as I said, we can go into more detail and break these down more, but these 3 high-level categories give a good overview of how these work and how they generate income. Now, one massive attraction to real estate investment trusts is in the UK, by law, they're required to distribute at least 90% of their taxable income directly to shareholders annually. That is a legal requirement. So shareholders are guaranteed to get at least 90% of the taxable income shared amongst each other. Real estate investment trusts are quite liquid. They offer the same liquidity as stocks, which means you can buy and sell shares easily without the hassles of traditional real estate transactions. So, if you're someone who's interested in traditional real estate investing, you would need to buy an entire property, go to a bank, get a mortgage, or have the funds up front to make the purchase and actually buy a property. But with a real estate investment trust, you can invest as little or as much as you want. As long as the real estate investment trust is profitable, you will receive regular dividends. And real estate investment trusts offer the same liquidity as stocks. This means you can buy and sell shares very easily without the hassles that you would have with a traditional real estate transaction, such as selling off an entire property. And these are global, with a very strong foundation in the UK, and we certainly have UK-only real estate investment trusts. But you can invest in them all over the world, and you can take part in an international real estate investment trust. Now in a moment I'll go into more detail about how you can actually invest in these and what your options are. So there are several ways that you can get involved with a real estate investment trust in the UK. One of them is to buy stocks, so real estate investment trust stocks, which are bought and sold on major stock exchanges. You have real estate investment trust funds, which are collections of various real estate investment trusts offering broad exposure to the real estate sector. Then there's real estate exchange traded funds, also known as ETFs. Now those offer broad exposure in a stock-like trading format. And I'll talk quite a bit about these in the future, just exchange traded funds in general, and I will be talking about various platforms you can take out to get involved with these. One of which is Invest Engine, which is a UK-based platform that allows you to build a diversified portfolio, which can include real estate investment trusts. One thing to remember when taking part in international investing is that although it does offer some diversification, it also comes with a currency risk. By that I mean, if the value of the currency that you've invested in increases or decreases, that also affects the value of your investment. It's not to say that you must invest in a UK real estate investment trust. It just means that when investing internationally, there are a different set of risks. And I should always say, risk risk, risk. Be aware of your risk tolerance. As with any investment, research is key. Look into the type of properties that they hold. Look at the regional market conditions, and more importantly, look at the historical performance. There's another caveat there. Historical performance is not indicative of future results. Still, it's important to look at the historical performance of the fund. I mean, if the fund has done nothing but lose consistently, is it worth investing in? Real estate investment trusts aren't just about property appreciation. A large chunk of their profits come from rents and mortgages, making them somewhat resilient during property market dips. So in summary, real estate investment trusts are a dynamic, exciting venture into real estate without having to actually buy physical property. They offer you liquidity, diversification, and potentially consistent dividends. If you've liked this video, give us a like, subscribe, and maybe ring the bell, because I have a lot more investment information coming. One of the upcoming videos I'll be doing will be comparing and contrasting various investment platforms. That's because, as I said, I'm a fintech engineer. These platforms are what I know best. I build them. Now, I mostly focus on the business-to-business market, but I will be recommending business-to-consumer platforms that you can get involved in.